Now, normally Chris Reardon goes through the positioning of the markets, but Tucker, you do a lot of work with Chris in the portfolios, and you got all the numbers today. So you want to give us an update on the positioning of the tally scores, Tuck?
Yeah, sure. So we'll start off by looking at the different ranking of all the different asset classes. So as Chris does every week, I'm sure he goes through and he lets you all know that domestic equities are number one right now. It has a tally score of 321, which means domestic equities and American companies and stuff are doing the best overall. After that, we have international equities. So that's at a tally score of 254, which is actually down a little bit from the last podcast, only about 4 tally marks, but down a little bit. Commodities are the next spot at 250. So that's actually gone up quite a bit since the last podcast. That's up about 11 tally marks. So
right.
that's been a pretty big jump. Then next we have fixed income, which is at 117, which is actually down about 7 tally marks from last time. It was 124. Followed by cash at 93 tally marks, which last time it was at 94. And then in the last spot, we have currencies, which is at 52 tally marks, which is, again, down a little bit from last time. It was at 54.
Okay. So the big move is commodities, right?
Yeah. The big move is commodities, and it looks like the most frequently used commodity right now is energy and oil. So that's what's kind of moving commodities up and down right now.
All right. So to characterize the period since our last podcast, U.S. stocks are still firmly in charge. International stocks are right behind. But all the little move in the short run has been commodities, essentially.
Yep.
Excellent.
Yep.
Well, and one of the portfolios that Four Star has, the dynamic portfolio, does own a component of commodities. And so that's how you would play that, or you can buy individual commodity holdings on your own also. So anyway, well, thanks, Tuck, for that update. It's been a really interesting market. We've gone into earnings season, and we've seen some really interesting IPOs coming out as well. We saw, since our last podcast, Coinbase made its debut. And you guys are familiar with Coinbase.
Yep. A little bit.
Sure.
And they did a public listing, right? And so I want to talk a little bit about that because Coinbase actually does trade cryptocurrencies. And you can set up an account and buy Bitcoin. You can buy the other Ethereum and all the other cryptocurrencies. So that's very popular right now. Bitcoin is over 50,000 a unit, had been over 60,000 per unit, 4 years ago. For the listeners in the podcast who've heard me repeat this over and over, we got in somewhere around $1,200 a unit. So it's up massively from there. So if you had done that, you could have bought that at Coinbase. We bought it through another group, but Coinbase is up big, a lot of fanfare. The market value now of Coinbase is 2 times that of the NASDAQ market itself, the stock market index itself. They will do lending, and they'll integrate more into a brokerage firm. But the thing we wanted to point out, though, is that Coinbase really is not owning cryptocurrencies as a business. They transact in them, right? So you're buying a brokerage firm, right? Aren't you guys?
Mm-hmm. Right. Yeah, that's just the thing. And like you said, it's got a value that exceeds that of the whole NASDAQ.
Right.
Just don't know how that works.
Yeah, it's a little crazy right now. So what do you pay for a brokerage firm? I don't know. But it seems like the valuation may be a little bit high. People are getting a little excited about it. So we would say probably be careful out there, right?
Mm-hmm. Yeah, I'd say tread lightly.
Tread lightly. Well, and then furthermore, we're into earnings season. We saw a couple major names collapse. We saw Intel collapse on earnings last week and Netflix. This week is more tech stocks. We've seen Microsoft and a few others. Didn't we see Tesla this week, Tucker, come out?
Yeah, so Tesla came out Monday after the close, and everyone kind of expected it to be a big quarter for them, and it still was. They reported revenue of $10.4 billion, up 74% year over year, and their earnings per share were 93 cents, up 304% year over year. And it looks like analysts were expecting an earnings per share of 79 cents. So they beat that by, what is that, 14 cents. And then they were expecting revenue of 10.3 billion. So they beat it by $100 million. So when you look at it, should have gone up, should have been a good reading for them. But honestly, over the last 2 days, it's just gone down. And the reason for that being is simply they thought it was going to do better. So they did great, but they didn't do great enough, I guess. And right. So that just scared everybody.
I guess they need to think more about the whole ideal of under-promising and over-delivering.
Right.
So they're exceeding expectations as opposed to, not quite meeting expectations.
Yeah.
Well, and some of the old timers might remember the concept of the whisper number. And so they'd put out an estimate or an expectation, and then everyone would start whispering behind that expectation saying, oh, it's going to be 90 cents, but it's really going to be 100 cents or $1. So really watch for that, but don't tell anyone, like a whisper number. So then if it didn't beat the whisper number, it would go down, even though it beat the expectation, right? So it's almost like we're into whisper numbers again. Right?
Yeah,
exactly.
It seems like that's about what happened. I mean, like I said, they had a great quarter, great year, but I guess it just wasn't great enough to make everyone feel good.